In this video, we talk about understanding how to wholesale properties. What is real estate wholesaling? Real estate wholesaling is when a wholesaler creates a contract on a property with a seller, then finds a third party to buy the property at a higher price. The wholesaler will then profit from the difference of the prices. On the next slide, I made an example so you can clearly understand a little better. So let's just say we have a seller that's selling a home and you are the wholesaler and you have somebody who's looking for a particular home. Let's say this is a 4-bedroom, 3-bath home. So you locate this home and then you make an agreement with the seller, let's say for $100,000 is the price. And so then you have a contract agreement with that seller to pay them $100,000. Well, you find out that the comparables in the area will allow that home to be sold at around 160, 170. So you decide to sell that to an end buyer for $130,000. Thus, at the end of the transaction, the seller will receive $100,000 for their home originally. The buyer will purchase the home for $130,000, and you as the wholesaler will profit $30,000. Now, if you're just starting out and you're wondering all the hoopla about wholesaling and how to start with little money down, well, we're going to break down exactly how you do that the proper way. So how to wholesale with little money. Number one, I always emphasize this, is you need to build a buyer's list first. So what a buyer's list is basically is you're going to compile a list of maybe a couple hundred names of other potential investors that are looking for a particular type of property in a particular area. When you do that, you're kind of working from the backwards forward, and that'll help you become a very successful wholesaler if you decide to start on this route. The second thing you'll need to do is build relationships with other investors. Now, of course, you're building the buyer's list, but some of these people are retailers and they're other wholesalers also. And so when you go to different groups and networking, you want to build relationships with other investors because they can not only be your buyers, but at times they're going to be your sellers also. The third thing on how to wholesale with little money is you definitely need to know your area very well. To be successful at wholesaling typically is going to take some time and some studying, but you don't have to cough up a lot of money. The basic thing you need to know is what are the comparables or the comps, as they're so called, comparable prices in a certain area. So where I live in certain subdivisions, I know that one subdivision, the price range of those homes are somewhere between $205,000 up to $235,000. And then I know another subdivision down the street, which their comparables are about 175,000 up to 200. And then I know another one where there's somewhere between 150 to 180. By knowing this, when a home comes for sale, I pretty much already have an idea what I could possibly sell that home for, all because I do my research. And the last thing is understand that you need to be, again, hungry and have a hungry mindset when you're doing this, because what you'll do is you're going to have several deals on the table or several contracts, and then through time you're going to be able to sell them and you'll make a very, very nice income by doing that. The reason that you need to submit several deal contracts is what you're doing in essence is what we call tying up the property. And so when you take a contract, a purchase contract, you'll have a stipulation in there that you won't close on the property unless you have a buyer on the end that's willing to commit to the sale. So you have some clauses in there that will allow you not to get stuck with the property. If you don't have an end buyer, then most likely you don't have to do the deal and you can scrap the deal. But sometimes you may have to put some earnest money up to secure the property. How to successfully find wholesale properties. Well, first, start with your local real estate investment association group. All over the country here in the United States and overseas, there are local groups that have investors in your area that are selling and buying properties. You definitely want to connect with them so that you can be in between and let them know that you wholesale properties or that you look for properties for buyers and sellers. The next place is you can look on Craigslist. You can find a lot of great deals from owners who don't want to pay high fees or pay for MLS or FMLS, which is the real estate brokers, basically electronic database where they have to pay a few $100s a month to list their home. A lot of people don't want to do that, so they end up posting it and marketing themselves on Craigslist and FSBO.com, which is for sale by owner. These are great reference points to find potential sellers who would like to go ahead and sell their home. The third thing is drive your local area. This is part of your research. A lot of times you'll find for sale by owners, which are going to stick for sale signs right in their yards, and they won't advertise it on any particular medium. And so sometimes you're able to grab a great deal with somebody who just stuck a for sale sign in their yard. Of course, like I said, network with other real estate investors, and it also helps to network with lawn care businesses, plumbers, electricians, different people in the community that are constantly at people's homes because they usually run into homes that are for sale or preparing homes for sale. And then, of course, the last is bank repossessions or the REO divisions. You'll learn to go ahead and give them a call, and you get to get a listing of homes that have been repossessed. And the great thing about that, ladies and gentlemen, is that a lot of those homes can be reduced in price by up to 80% of the original loan to value price or the assessed price of the home. So for an example, you might find a bank REO that repossessed a home that only owes a balance of maybe $30,000, but originally it was purchased at $200,000. A lot of times you can make an agreement and put a purchase contract on that deal once you found an end buyer. And so, of course, you'll get qualified and you'll purchase the home for, let's say, uh, it could be maybe $80,000 that the bank will accept to clear the debt and take a little bit off of that. And then you could sell it to an end user for close to about $150,000, $180,000 compared, of course, looking at the condition of the home. So those are ways that you can definitely wholesale properties to an end user. How to spot good deals. First of all, look for properties next to schools and shopping areas. These are prime locations for where you'll see a lot of people that sell homes that will go quickly. And so if you know your area very well and you're next to schools and shopping areas, those homes that's usually within a 3, 4, 5, or 6 block radius of those areas usually tend to sell very, very quickly. One thing I avoid is I don't do burn downs or homes that have been burned because of fires. A lot of times you're going to need a lot of rehab work to go ahead and get that up to code and specs. And then, of course, it's going to be hard to sell because you have to go through the code process. The best way to look for wholesale deals are just look for homes with bad lawns and peeling paint because these homes need little care to get them up to par to where you can get a few $1,000s back. So a lot of times you can have your own lawnmower, cut the lawn, put some outside fresh paint that'll cost you less than about $100 to get a few gallons of paint. And then of course you have a new home that you could go ahead and put on the market. One thing I've learned is to look in I'm going to stress that semi not so good areas. Of course, if you look in very affluent areas, you're not going to get many wholesale deals because people want retail prices for that. So, of course, if a home is abandoned or maybe it was bank repossessed and the price point is usually between 200, 300,000, then you won't be able to wholesale that too easily as you would a home that's probably in a semi-bad area. That means maybe it's a couple miles away from a very bad area, or maybe it's right on the outskirts of a certain area. With that, you usually get a good 70, 80% of spread or profit margin in that home so that you could sell it for at least about a 30% profit margin. And then it leaves some for the investor to want to go ahead and buy that home from you very quickly. They're also easier to rent in these semi-bad areas. The last thing I want to tell you about a good deal is I never, never, never look at any homes that are under 3 bedrooms and 2 baths as a minimum. You always want to, when you're wholesaling or selling homes, you want to look for 3 bedroom minimum and 2 bath or 2.5 bath minimums. Reason being is that most people that look for a home are usually families, and usually people want a separate bathroom for husband and wife and maybe for the kids. And of course, if you have just a two-bedroom, one bath, history has shown us that it's very hard to sell, and those tend to stay on the market a whole lot longer. So you want to be in the best position that when you secure a wholesale deal, you want to be able to have a buyer on the back end that's ready to rock and roll and purchase that deal from you very quickly because it's in demand. Here's a big thing that I know will definitely help you is you definitely have to learn to look at the numbers. And here's my saying, if it doesn't make money, it doesn't make sense. So of course, I'm going to look at the cost of a home and do comparables in the area. This is where, as you become more familiar with your local area and look at more comps on a regular basis, you'll start to understand what the going prices are in certain local areas. So when a home becomes available in that particular area, you won't be surprised that you can be able to make a quick profit off of that home. An example again is a three-bedroom, two bath, let's say in a particular area, has a balance of about $100,000 on that home. And it maybe wasn't taken care of the best. The lawn was kind of let go. Maybe it has some peel and paint. So nothing really big, but it's a few cosmetic things, and that house could go pretty well. And so we find that when we did our comparables in the area, and comparables are usually done, ladies and gentlemen, within a 1 mile or less area of the particular target home that you're looking at. And what we're looking at is the last current sale that happened within the last 12 months, the last current sale within the last 12 months. And so let's say 2 months ago, a home similar to that, of course, you're looking for very similar apples to apples, oranges to oranges. We find another three-bedroom, two bath with approximately the same square footage, approximately same amenities, things of that nature, but it sold for 190,000. So the difference between those homes is that maybe some of the appliances are updated, or maybe the outside looks fresh and the lawn is cut. And so this is a very good potential deal that you could go ahead and take advantage of because you already know it's in a good neighborhood. You already know what the numbers look like, and you see a great deal. So you have room to go ahead and sell this home, possibly somewhere around 140 to $150,000, because you want to leave some cushion in there for the next person that comes. That's just professional courtesy. But not only that, that definitely encourages your buyers to really want to take advantage of the deal quickly when you're able to tell them that you have nearly 50,000 or $40,000 of equity in that home. Don't be greedy. Put a home under contract and sell this one for 150. You want to leave something good for the buyer, and you want to walk away happy. So here's how we conclude. How do you properly wholesale? Close the deal in 3 steps. Number one, as a recap, you want to secure your buyer first and know what they want. On my buyers list, I'm always going to write down the contact person, of course, what they're looking for, a 3-bedroom, 4-bedroom, 5-bedroom in a particular area, and they're probably looking at a particular price point. So I mark that down and keep that in a database. And so then when I am searching for wholesale deals, when I find something that fits the criteria of my buyers, then I can immediately go ahead and put a contract on if everything fits, and then I know I have an end buyer. Usually this transaction can be closed in less than 45 days if done properly. So once verified and the numbers look good, secure the property with the purchase contract using a subject to clause. Of course, I'm not going to get real deep into contracts, but in your particular state, wherever you are, there usually is a standard RIA approved contract. And this means the Real Estate Brokers Association has approved a state standard contract, purchase contract for you to use. And so you don't have to be a real estate agent to use these contracts. You could be a regular investor. And as long as two parties agree on the contract, this is a valid contract that can stand in the court of law. In there, you want to have what we call a subject to clause. And a subject to clause allows you to assign this property to another buyer. And that's why you want to have that. It's also called an assignment clause. And so by having an assignment clause, you can assign this property to somebody else and sell the contract. Once you've done that, close the deal with the buyer and collect your money. This concludes our video. Thank you for watching and stay tuned for our next class.